You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koos, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
All right, everyone, this is the last podcast of the year, and while this one's going to be both fun and interesting, it's a short one. Selfishly, I'm ready to spend some downtime with my family. So as I record this episode the week before Christmas, you're going to see it the week after Christmas, when I hope that I will have already spent lots of time doing as little as humanly possible. And I hope that you're doing the same. You got to have that downtime, that me time, and you got to recharge during the holidays. So back to the task at hand here. It's been a terrible market this year. I think it kind of goes without saying. I think everyone knows that, who's paying attention anyway. It's been just an absolute terrible year for the markets. One of the worst on history, believe it or not. 2022, with it just being a few days here before it's over, is turning out to be the worst year in history for the 60-40 balanced portfolio model. And similarly speaking, which we've seen some of the worst 1 and 2 year performance numbers out of the bond market this year, which is ironically enough why the balanced 60-40 model, hasn't been working, because normally in the past anyway, for call it 30, 40 years, whenever stocks would do poorly, bonds would kind of offer some sort of support when things weren't going well, whereas this past couple years, bonds have just been absolutely clobbered. This year's no exception to that. So with it being a terrible year for bonds, and then on top of that, a bad year for stocks, even though you have bonds in your portfolio, especially the longer dated bonds, in other words, the longer out the maturity dates in your bonds, the worse things would have gone as rates have gone up. Because for those of you that don't know, when interest rates go up, bond prices go down. So as interest rates have been going up and up and up this past year, bond values have been going down in value. So the old adage that bonds are safe, or that when stocks go up, when stocks go down, bonds go up, that old adage is pretty much history at this point. So we don't know what the future is going to hold, 6 months from now, necessarily speaking. But I think it's pretty safe to say that over time, I don't think we're going to see the same kind of 30, 35, 40-year bull market in bonds that we became so used to. So when you look at 2022, there are actually only 2 other years that were worse for the stock market, and those years were 2002 and 1974. Yet here we are again, just a few days away from the end of the year, after which we can clean the slate. We can start a fresh new year of what I think we're all going to agree and hope will be a new bull market, right? Remember, bull markets attack with their horns from the bottom up. That's good. So bull markets are good. Bears attack with their claws from the top down. Bears are bad. We don't want bear markets. We want bull markets. But we can't walk out of 2022 and look into 2023 without talking about and really clarifying what the Santa Claus Rally is. I've written about this several times over the years. I'm not sure if we've ever done a podcast, though. And just today, I saw a tweet by a pretty prominent analyst that I'll leave unnamed, and he was using historical numbers to describe how the Santa Claus Rally, isn't working this year, when in reality, it hasn't even started yet. So why don't we get into it here? But before we get started, as always, a few housekeeping items. If this is your first time listening or watching, then thank you for joining us. I'm Adam Koos, President, Portfolio Manager, and Senior Financial Advisor at Libertas Wealth Management Group, and you're listening to the soon-be-renamed and rebranded Cash Podcast. Again, as I said last time, while the name is going to change, you'll still be the first to get these episodes if you subscribe, so please be sure to link up and subscribe on YouTube, Twitter, Spotify, and you can follow me on Twitter at Adam Koos, as well as Instagram at Financial Surgeon. If you'd like to schedule an intro call to confidentially discuss your financial situation in more detail, or if you'd like to get a second opinion on your retirement plan and or investment portfolio, all you have to do is head over to our website at libertaswealth.com, click on the little button that says click here to get started, and somebody will reach out to get something on our calendar. Last but not least, all links, visuals, charts, and other educational resources are always on our website. You can always hit up YouTube, pause, rewind, rewatch, and I am going to have just a few charts. But like I said, and as promised, this is going to be a pretty short one today. So let's go ahead and get started. I like to start with a quote, and this one's easy. It couldn't be easier to pick a quote today, because Yale Hirsch, who started the Stock Traders Almanac way back in the day, came up with this quote back in 1974, and it goes like this: if Santa Claus should fail to call, bears may come to Broad and Wall. And what that means is if the market doesn't go up during the Santa Claus Rally, in other words, if Santa Claus should fail to call, then bears, a bear market, again, bad market, may come to Broad and Wall. And Broad Street and Wall Street, of course, is where the New York Stock Exchange is, downtown Lower Manhattan. So what he said is if Santa Claus should fail to call, bears may come to Broad and Wall. And so what we're trying to look at here is the last 5 trading days of the year and the first 2 trading days of the new year. That's what the Santa Claus Rally is. So let's jump over to the details. The last 5 trading days of the year this year start on Friday, December 23rd. So we haven't even started the Santa Claus Rally until the Friday before Christmas. By the time all of you are either listening or watching to this, it's going to be midweek, the week between Christmas and New Year's Eve. So at this point, just understand that the Santa Claus Rally started, so I'll speak past tense here. So it started on Friday, December 23rd. That was day 1. And it ends on Wednesday, January 4th. And here's the numbers. Here's where it gets really, really interesting. The average rate of return over these 7 days is 1.3%, which is really, really high. And on top of that, there's an 80% win rate. So when you look at the total number of times that it's been up versus down, it's been up 80% of the time. And this is when you compare it to all other 7-day periods throughout the year where the average return is 0.24% versus the Santa Claus Rally at 1.3%. And then the average win rate is just below 60% for the non-Santa Claus Rally 7-day periods throughout the year. And I've got data. This is from Jeff Hirsch over at Stock Exchange Almanac. They do amazing seasonal work there. I've been a subscriber for years. If you're a nerd like me and you want to pick up a copy and get subscribed to their online version, they're awesome and it's not very expensive. So, but anyway, what we're looking at here is a table of the Santa Claus Rally, again, the last 5 days of the year and the first 2 days of the new year, going all the way back to 1994. So we're kind of looking at a modern era here. And if you look down the chart, you can see here that with some exceptions, of course, again, because it's an 80% win rate, not a 100% win rate, but with some exceptions, when you have a Santa Claus Rally that's up, you tend to have a good year in the market the following year. And then when you have big years where the market's up big, like for instance in 1998, the Santa Claus Rally was up 4% in those 7 days. And then the following year, the market was up 26.7%. If you look at the Santa Claus Rally, for instance, in more recent times, in 2022, it was up 1.4% coming into the new year, this year that is. But obviously, the market, just as of a couple weeks ago, was down about 18%. And that's just on the S&P 500. Obviously, the NASDAQ's worse. So you can look at these numbers and see that, it's again, there's no such thing as certainties. We live in a world of probabilities here. But when you look at these numbers, what we're looking for this coming week, again, you're going to be listening to this on Thursday probably, or Friday, just before New Year's. We want that period between Friday, December 23rd, and just after the New Year, which is, again, the first few trading days, 2 trading days of the New Year, which is January 4th, would be the last day, to be positive. And if it is, that gives us a pretty good win rate again, that indicating that the market may be doing well in the future. Actually, before I move to the next slide here, I also wanted to point out that while it's not on this chart here, this will be perfect for those of you listening on Spotify or iTunes. But this year looks eerily similar to 1974. And I know I already mentioned that this year, 2022, was the worst calendar year for the market, with 2 exceptions, 2002 and 1974. And the reason why it looks really interesting and really comparable to 1974 is because you have this midterm election year in 1974, just like this year. You've got the market bottoming in October so far, which so far this year, the market bottomed in October thus far, assuming we don't get a really big retest, but the market has been pulling back into December and trying, at least what looks like trying to retest those October lows. You've got no shortage of bad news. High gas prices, you've got high inflation, we've got interest rates going up, all kinds of unrest around politics again, as I mentioned, and we're already in a bear market, which we were back in 1974 as well. And in my opinion, I would argue that we're already in a recession, but we were in a recession back in 1974 as well. So the good market is that bear markets, in other words, the stock market is a leading indicator for the economy. So the stock market bottoms before recessions end. And I think that's crucial to understand and to let that soak into your brain, is because when you hear financial news, financial media, the websites and research that you subscribe to or just kind of happen to notice, when you start hearing things like there's going to be a recession next year, or there's recession worries next year, or that there's what if we fall into a recession, then what's going to happen? Two things to understand. First of all, again, I want to emphasize my personal opinion, which is that we're already in a recession. We just don't know it yet. And then the second is that the stock market bottoms and heads higher before the recession's over. So oftentimes, before you even realize you're in a recession, the market's already starting to come back when the least number of people expect it. So basically right now, what we're looking at is everybody's a bear. In other words, everybody's cup half empty. And I don't literally mean everybody, but most people. And while it definitely looks ugly in the market right now, I still continue to feel like we are probably closer to the end of this bear market than we are to the beginning. And speaking of fear, and I hate to say that fear is good, but there's this thing in the market called sentiment. And typically what happens is markets tend to bottom on fear and they tend to top on greed. And what we're seeing right now, and this is CNN's fear-greed index. So those of you that are watching on YouTube, you can see that we're at a 38 out of 100, which is not extreme fear. When markets go through huge, big bottoms like COVID, for instance, we were in the basement in extreme fear on the CNN fear-greed index. So, but either way, right now we're looking at a 38 reading on the fear-greed index. And again, as we start to see the market flush itself out and we see higher fear numbers, we start to see higher put call premiums. We're looking at put call ratios getting higher. People are insuring against the market going down. They're worried that we're going to see another leg down, and we may. But if we don't, if we continue to see really, really high fear, that is one piece of evidence that suggests that perhaps we could see the end of this bull market if we haven't already seen it in October. So that's one piece. The second piece I want to show you here is this is just December. So again, by the time you were watching or listening to this podcast, we'll already be in the tail end of the month of December. But what I want to focus on here is that the market has a tendency to bottom. When I say the market, not just the S&P, but all of the major market indices have a tendency to bottom right around day 10 or 11. And that's when I say day 10 or 11, I mean trading days, not calendar days. So day 11 was, I believe, December 16th. And what we tend to see is the market kind of bounce and then pull back and flatten out into day 14. And then from there, you tend to see that Santa Claus Rally take place, which again, I want to go back to the rules, just one more time here. The Santa Claus Rally is the last 5 trading days of the year and the first 2 trading days of the new year. So if I go back to our chart we were just looking at for the month of December, it's these last 5 days right here from the day 17, that's trading day 17 through 21, and then the first 2 trading days of the new year, which would end on Wednesday after January 1st. And then the last thing I want to show you here, which is kind of funny and has absolutely nothing to do with money, but I don't know about you, but I'm already getting my New Year's resolutions together. I know some of you probably think they're silly, think that New Year's resolutions are dumb or that they're wasteful. Maybe some of the reasons why people feel that way is because they never stick to them, and maybe that's why they feel that they're dumb. For me, I'm in the boat that if there's anything that I can ever latch on to that might create positive change in my life, then I'm all for it. So even though I haven't always been the best, in fact, I've probably been worse than best at following my New Year's resolutions. In other words, there's probably way more times than not that I never hit my goals than times that I actually did hit my New Year's resolution goals. However, we all know that those goals typically have to do with health. They have to do with weight loss, typically getting healthy. Obesity here in this country, in the U.S., is just absolutely terrible. The statistics are very, 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 very bad and getting worse. So this chart came from a podcast with 2 of my good friends, Patrick Dunawilla of the Chart Report, and Dr. Phil Perlman, who was a very good, kind friend to me. I would say not last year, but during COVID, He lended his phone on his walks when we go on walks together, technically apart. He's in New York and I'm in Columbus, Ohio. But he gave me all kinds of advice that I hadn't completely started taking until this year when I went to a doctor's appointment and realized just how bad things had gotten. In other words, I wasn't invincible anymore. I finally reached an age in my early 40s where maybe I can't eat whatever I want and just rebound, right? So what's interesting about this chart you're looking at right here is this is the seasonality of weight gain. This is the New England Journal of Medicine put this together. And what you're looking at is that the average weight change is a percentage of body weight and how it changes over time. So as we start the year in January is technically when weight tends to be the highest. The only exception would be Japan, which during Japan's Golden Week in May, they tend to see another spike in weight gain in just before summer starts. But then, we all tend to try and lose weight through the summer, and then things spike up from November when Thanksgiving comes in the U.S., and then Christmas in the United States, overseas in Germany, and then everybody's weight kind of peaks out right during or after New Year's, at which point we're all back on the bandwagon. So I don't know about you, but I plan to make my weight loss maybe move this curve a little bit more to the left here, but I need to get healthy, or healthier, I should say, and I need to drop some weight and get in the gym and start eating better. So I hope all of you make some New Year's resolutions that not only make you a healthier person, but I hope you make some New Year's resolutions next year that put you in better places with your family, that you're improving relationships, that you're improving your relationship with money, that you're looking into your financial plan. If you don't have one, that you're getting one put together. If you've had one but it hasn't been reviewed in a long time, or if you don't feel confident in it, that you're getting second opinions, which is that's the shameless plug here. If you don't have a plan, if you're a successful individual that feels like you've been doing well from the standpoint of saving, but you haven't ever really gotten serious about retirement planning, investment management, estate planning, and things of things of that nature. If you're a business owner, a successful business owner, and you also haven't those things haven't gotten really serious in your life, but you know that they need to be a serious part of your life as you get closer and closer to wanting to exit. In other words, sell your business. That's one of the things that we specialize here at Libertas Wealth as well, is doing valuations, value acceleration exercises, filling the gap or closing the gap between what your valuation is today and where you want it to be. So it doesn't matter who you are, but if you're somebody who is looking for help when it comes to your retirement planning, your investment management, your financial planning, and you're looking for a second opinion on your retirement plan, or if you've never had one and you'd like to get one, because believe it or not, there are more people who don't have a financial plan, a written comprehensive plan. There are more people who don't have one than people who do. So don't feel like you're in the majority don't feel like you're in the minority of people who haven't been responsible. You'd be surprised how many people are out there that have not taken the steps to get their financial house in order, and maybe that should be one of your big New Year's resolutions for 2023. In fact, maybe that's what we'll start talking about on our first podcast of 2023 is New Year's resolutions. We'll try not to bore anybody, especially for those of you out there who don't like New Year's resolutions. But with that being said, I think I'm going to close out for the day. At this point, it's a new year. I appreciate all of the subscribers we've had over the years, especially since COVID when we really had to ramp things up. So as we enter a new year, please feel free to share this episode with your friends and family. And if you'd like to discuss, again, your personal situation further, please remember you never, ever have to be a client to ask a question. As I mentioned earlier, if you'd like to set up an intro call to discuss your financial situation further, or if you'd like to get a second opinion on your retirement plan, head over to our website at libertaswealth.com and click that button that says, click here to get started, and then you'll be taken through some prompts to get a call set up on my calendar. Be sure to subscribe on iTunes, YouTube, and Spotify. There are other places where you can find this podcast, but those three are pretty much the big three. And remember, you can sign up at libertaswealth.com to not only get these updates, but you can also get access to screencasts, videos, and articles that we send our clients delivered as soon as they're released directly to your email inbox. Be sure to follow us on Facebook. I'm also on Twitter at Adam Koos, as well as Instagram at Financial Surgeon. And as I always say, there are thousands of podcasts out there. You chose to give ours a listen today, so thank you so much for joining us, and we'll see you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koos. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.